What is private equity and what do investors actually do? Because I've received this question millions of times from strangers, from relatives, all asking the same thing. Kenny, what do you do? And to be fair, it's a valid question. Private equity is super secretive. You have people making millions and billions of dollars, barely any news coverage. They own pretty much everything, but no one really knows what they do. So to clean my DMs and hit 5,457 birds with one stone, I'm going to walk you through a day in the life of a private equity investor and share my entire calendar from start to finish. And this typical day that we're going to walk through on my calendar kind of hasn't changed since I started my career many years ago at Blackstone. It is still broken out into these 3 core blocks of my calendar of core responsibilities as a private equity investor. And I'm kind of convinced that if you can make it through this day with me, you might have a shot at sticking it as a private equity investor. And to set expectations and let you know what private equity is, we are buying majority ownership in companies. So grandma, no, I am not a bank teller. I am not selling stocks. I am buying boring businesses. You got it? I have to make that very clear because my grandma thought that I worked at BlackRock for 10 years, but no, it is Blackstone, and she thought I was a bank teller, but no, I'm an investor buying businesses. That's what private equity is. All right, young master of the universe, let's talk about how we start our day. We're up and at it with healthy breakfast at 8 a.m., ready to tackle the day. And we end the day, we'll talk about that later. All right, for now, let's rock. Starting our day incredibly strong with sourcing. Sourcing is finding quality businesses to buy. Without leads of potential acquisitions, investment firms will not be able to deploy capital. Plain and simple. And just like how businesses have pipelines of customers that they want to sell their products to, investors, good investors, maintain a pipeline of targets in businesses that they eventually want to acquire. And this is easily my favorite part of the job. And if you haven't noticed by now, I'm a people person. I love connecting with people, I love talking to people, and I love businesses. And sourcing is so dynamic and so cool because one minute I could be spending hours looking through different business listings, trying to find that needle in the haystack of an opportunity of a business that's for sale. The next, I could be speaking with bankers from all across the world who have relationships and pipelines of a bunch of different companies that are potentially coming to market. Or I could be spending a bunch of time doing proactive outreach and research, trying to find businesses on my own, right? Like traveling around the world, going to conferences, or looking at business awards and trying to figure out what are the best small businesses or middle market companies in my particular area. Or just reaching out to CEOs and owners blindly via email or calling them and following up. It's kind of like a sales job now that I think about it. But it's like really cool because if you think about a salesperson's job, they have a product or service that they're trying to sell. Then they have a prospect list that they're trying to convert into customers. I kind of have the same thing to where I have a product I want to sell, which is our investment capital. And I have a prospect list of probably good companies that I want to potentially own. And then I speak with them and I try to find the best one and then convince them to sell to us because there's a bunch of other investment firms that they could sell to. So I have to sell the service of our capital allocation and ownership to these owners. It's kind of cool. But just like any other sales job, it is incredibly humbling because you have to reach out via email to business owners. You have to call them. You have to send flowers. You have to show up at conferences and you get ghosted and no one answers. But eventually there's that one business that responds or there's that one conversation or the network effect starts to kick off and then you start to build incredible leads. So I'll give you guys a very real example of sourcing. So when I was at KKR, one of the sectors that I covered was utility services, meaning businesses that provided services to utilities, electric utilities, right? It could be someone that is going and providing vegetation management for transmission distribution poles. Things like that, right? One of the approaches is to meet with all the bankers in America that focused on serving and providing M&A services to electric utility service type companies. They exist. There's a lot of them actually. So meeting with all those folks. Another path is going to conferences like Distributech, where there are hundreds and thousands of vendors there that are all businesses that could be for sale in great cash flowing companies that we would eventually want to acquire. And then another approach is finding a list of the top 100 utility services companies in America, finding the contact information of the owners and reaching out to all of them, setting follow-ups and ensuring that if they don't answer, I call them, I keep calling them until they pick up the phone. Until eventually one of them converts into an actual business that we want to go out and acquire. Now imagine doing that across multiple sectors, multiple conferences, multiple themes, and you could be covering 10 to 20 different sectors at a time. So that's just one example, because sourcing can take up your entire life, but you have to be productive, efficient, and tech-enabled to do this thing very effectively. Because I'll tell you right now, if you are an investor that is sitting on your behind waiting for deals to come to you, odds are you're not a great investor. The best companies that are for sale usually aren't really for sale. It takes a lot of hard work, grit, and effort to find that needle in a haystack, go to that owner, and convince that owner that you are a great capital partner to the business. Because if their business is growing 20, 30% year over year, has cash flow margins of 30, 40% plus, and the owner has been clipping millions in dividends a year, why the heck would they sell it? So you gotta find them and convince them that you are the next best owner of that business. It's possible. I've done it a bunch of times, but it's a lot of work. And as you know, salespeople are incredibly persistent. So I'm gonna practice my sales skills. Did you subscribe to my channel? This is the home of smart money moves. If you haven't, why haven't you done it already? JK, this is the home of all smart money moves, where my entire goal is to take everything that I learned on Wall Street and give it to Main Street completely for free. I want you all to be as knowledgeable as you can when it comes to finance, investing, money, and more importantly, buying the business. And if you already subscribed, welcome back, baby. And if you aren't, I don't know what you're doing. So what do you do once you found that golden business? This is where we kick it into the next block of my calendar, and that is diligence. All right, so diligence is so cool too, because I like to summarize this as I get paid to ask questions. All right, what is diligence? Diligence is trying to figure out whether a business that you sourced or that you're looking at is a good or bad business. Because I want you to think about this for a second. What I said at the beginning of the video is that private equity is taking majority ownership in a business, AKA owning the whole thing. So what do you want to do before you actually buy the entirety of a business? You want to do your homework. So this is where we roll up our sleeves, we ask questions, we go to site visits, we're doing the financial analysis, and we try to figure out, is this a good or bad business? And more importantly, we want to understand, what do we need to believe for our investment returns to actually work out? And before I dive into the nitty-gritty of diligence, I want you to think about this from a house perspective, right? Some of you watching this video probably went through the process of trying to buy or bought a house. Now, when you're going to go buy a house, you're not just going to look at the listing, drive by the house without leaving your car, and then pay for the thing and own the whole house, right? Odds are you're going to double, triple check the listing. You're going to visit the house, get out your car, go to every single bedroom, check out the garage, check out the state of the materials, the construction, the landscaping. You're probably going to hire an inspector to do another level of diligence on that property. You're probably going to have a bunch of other folks come in to do tests on the sanitation and the soil levels and all kinds of things to ensure that what you are buying, what you're about to live in, is fully functional, safe, and works. Right, but that same mindset, you want to apply that to a business because you are owning a living operation of customers, products, employees, communities, a reputation, and millions of dollars, potentially billions of dollars at risk once you own this business. Because the last thing you want to do is buy a business and end up that the product or service is bad. The customers don't like you. The employees will leave without you. That is the worst thing that could happen. So what is super important as a private equity investor is that when you buy a business, you want to make sure you have done enough homework, aka diligence, to ensure that you know everything about the operations. You know all the products and services. You've spoken to all the customers and competitors. You know everything about our team and the operations and the leadership, all those kinds of things, to ensure that you are walking into an operation on day one of your ownership of something that is stable, something that will grow, and something that will cash flow. Now, can you predict the future? No, no one can. And odds are your model that you built for this investment is probably going to be wrong. But what you can do is ensure that you have dotted every single I and crossed every single T before you sign a purchase agreement. Now, you know how like when you go buy a house, there's like diligence checklists that have like the key things you want to ask and request before you actually buy a house to inspect, right? You know that also exists when you go buy a business? Well, at least in my head. So if you're curious about how to find companies start to finish for sourcing, if you also want to know how exactly to diligence a company, what questions to ask, what financial metrics to ask for, what data to ask for, what are the right benchmarks and financial analysis to do once you have all of that data, I summarize in like a 15, 20-page free ebook of how to buy a business, start to finish. It's not the prettiest, but it's action-packed and info-packed. If you want a copy of that, shoot me a DM on Instagram and say HW, standing for homework. And I will send you guys a free copy of that. There's no gimmicks. I just want to give you guys as much resources and information so that when you go buy businesses, you diligence it the right way. Because if you buy a business and you miss something, that could cost you your entire investment. So if you guys are interested in that, check out that link down below or shoot me a DM with HW. All right. So now on the nitty gritty of diligence. So let me give you guys like an example of what it was like at Blackstone doing diligence on a deal. So there's of course like commercial, financial, and like operation due diligence based on the information that the company provides. So when you're looking to do a deal, you sign an NDA and you start to get access to like everything about the business. You start to receive thousands of docs on the employees, on the business, on their product or service, on their financials, on the customers, all kinds of things. And a large chunk of an analyst, associate, VP's role is to dive through all of that information and try to process what matters, what's important, and what the story is telling about the business's operations. Plain and simple. That's kind of like checking the pulse of the business. And then the part which is also really cool is commercial diligence and trying to understand and somewhat predict what's going to happen after you own this company. And we used to work with folks like GLG and AlphaSense, which are essentially expert networks of folks that have a bunch of experience in a space that we can pay per hour to ask them a bunch of questions. So let's say, for example, I was looking to acquire this Bio1 business. And if you haven't checked out that video yet, it's an absolute really cool video. It's a biohazard cleanup company that we found here in California. And if I were at Blackstone and I wanted to do diligence on this space, I would hit up GOG and I would say, find me 100 experts from the biohazard cleanup industry. Folks that have worked in these businesses, that are CEOs or former CEOs of these kind of companies or customers of these kind of companies, and I want to spend an hour each with all of them. So I want to spend 1,000 hours asking 1 million questions to people that know everything about this industry. And these aren't just like people that are somewhat familiar about biohazard cleanup. No, I want people that have spent their entire career in the biohazard cleanup space. And I'll pay them per hour to ask them a bunch of questions around what's happening in this market, what's happening with customers, what is going to happen with like macro or policy trends in this industry, what's keeping operators up at night, what do you think the reputation is of this particular business that I'm looking to acquire? Things like that. Now, of course, this is all on a blinded basis so that you never give up any confidential information, but just imagine spending 1,000 hours asking questions about one market and one business. You kind of learn a lot. So this part kind of feels like a HBS style like case study that you have to do. Like you have to study and understand everything there is to know about the inner workings of a business. Of course, like the financial and strategy and operations diligence, but then the commercial diligence of like trying to paint a picture of what's going to happen after you own this business. Are customers going to spend more? Are competitors going to innovate and improve? Are you going to get bought out by somebody else? Like things like that. Trying to understand what is the commercial attractiveness of the business today, as well as during my hold period. It's like I'm a painter, right? I have a blank canvas, investment opportunity. Then I have my magic painting utensils and I have to like paint a thesis of what the business looks like today compared to like what it will look like in the future with my diligence findings, things like that. And then it consolidates into my financial analysis to showcase that with everything that I learned, I'm pretty sure the market's gonna grow 5 to 10%. And this underlying business is likely going to grow aligned with market. So my revenue assumptions of my model should be 7.5, right? Things like that. Or understanding the cost profile of all the competitors shows that all the businesses in this space have around a 30% steady state EBITDA margin. So I think that this business that currently has 50% is likely going to see some margin compression to be more in line with average around 30, 35%. Like little things like that, you know? But you do this time and time and time again, and usually some firms specialize in a space to where they have looked at almost all of the notable players. They've done diligence like this multiple times a year for many years. So you can already see that some funds actually have incredible advantages off of simple pattern recognition by dedicating their investment focus to one particular space. So that's a cool thing that you can do as well. Me, I was a generalist, but other firms have specialties when it comes to diligence. So you dig, and you do so much homework and you just simply ask questions until you build enough conviction to pull the trigger invest and buy a company. Now, when you buy a company, you don't just let it sit there on a fancy trophy on your desk. This is an operation with real employees, with real products or services, with real customers. You gotta run that thing. Now, of course, you have a management team, CEO, CFO, CMO, all that stuff. But what do the investors do after they own a company? And this leads us to portfolio company support. So this is my third last block of the day. And so far, we've probably spent 12 hours doing sourcing and diligence. Now, the last 4 to 6 hours are probably going to be spent with portfolio company support. What is this? This is essentially guidance, mentorship, and teamwork. Because you want to think of private equity and their underlying portfolio companies like an NBA team. Of course, you have ownership, but once you have ownership, you also have a dedicated GM. And that dedicated GM usually is someone on the investment team that led that deal. But then you have coaches. And I like to think of the coach as the CEO of the business. And then I like to think of the actual business, its operations, and its team as the players. The coach kind of manages the players. The CEO manages the business. The GM/ownership, we manage the coach. And as a private equity investor, I'm not going to show up at the local stores and selling product. That's not my job. My job is simply to provide strategic financial advice, guidance, helping to replace the coach if the coach is not performing well enough, helping to think through M&A, whether we want to acquire another lookalike or sell the business or merge with another larger company, or if we need to raise more capital for a particular product, things like that, big needle-moving, finance-related, strategy-related things that move the trajectory of the business. Not necessarily the day-to-day operations of running the company. What does the coach do? The coach enables the team, it sets the tone for the product or services, speaks with customers, is on the ground and fighting in the trenches every single day to win games, to win business, to win for the company and our employees and our stakeholders. That's what the coach does, the CEO. So as you can imagine, for the portfolio company support, I used to have weekly and monthly conversations with the leadership teams of the companies that we acquired. We used to have conversations all the time around, hey, we noticed our competitor at this conference keeps growing and popping up. Should we acquire them? So having conversations around potential acquisitions and M&A, or having conversations around, hey, I think we really need a CFO and I can't find someone. Can you help me find a CFO? Or hey, I think we need a little bit more capital to invest in our AI capabilities or to invest in R&D to ensure that our products and services are competitive against all the other stuff. I think we need a little bit more capital. So then as an investor, thinking it through capital markets or resource allocation or trying to figure out whether or not that project has a clear return on invested capital. Things like that. So as you can imagine, that relationship between leadership teams of portfolio companies as well as the actual investors and owners is very fluid. Because the leadership teams, CEO, CFO, they can't do everything themselves. Oftentimes, they might come to you and say, hey, we're seeing our competitors get a bunch of talk time. They're taking a bunch of share. Are they worth acquiring? So us going through a conversation around synergies, product, cost-related to actually buy a competitor. Or thinking about, hey, we want to invest in an initiative or a product or AI capabilities. Do you have incremental capital to invest in this type of growth initiative? And us as investors doing the analysis, doing the return analysis of, hey, is there a real return on invested capital for us spending time here? Will this improve the overall value of the business if we invest in this particular space? Or the CEO might say, hey, my chief marketing officer or my CFO left yesterday and I need to run this business. Do you have anyone in mind? So us as investors tapping into our talent networks or having executive search teams or headhunters find immediate replacements for key leadership points off the rip. Or if the CEO is just absolutely dropping the ball, having those tough conversations to put the right jockey on the horse and find a new CEO for the business. These are the kind of things that naturally happen between an owner as well as the leadership team of a business and private equity. And what's really cool is once you start having a portfolio of businesses in different geographies, in different asset classes like infrastructure, real estate, business, you can start having so many intellectual synergies to where if you want to buy an investment in one particular space, you can do so much diligence based on another investment that you might own in a similar geography, or a property that you might own in that area, or an infrastructure asset that you might have a little bit underlying data onto key macro trends, things like that. These are all really cool ways that an owner and private equity investor can provide value to businesses. Because look, businesses can't do everything themselves. Businesses, in order to grow and realize their truest potential, they need capital and they need strategic help. And private equity investors, that's the DNA of your existence, is to provide capital to great businesses and to be extremely knowledgeable or connected or well-versed in a particular space to provide that strategic guidance. So what am I doing now? Now I run Dreamline Holdings, and we are focused on finding and buying great businesses. So that's the sourcing piece. And once we found a great business, we're doing a bunch of diligence, aka a lot of homework, aka a lot of questions to ask and understand if this is a good or bad business. And then once we own one, we're going to provide strategic guidance and support and capital to ensure a business reaches its fullest potential. And if you want to get an inside look of how diligence actually happens in private equity, check out this next video where I spent 24 hours with this business that is in the biohazard cleanup space. I was able to spend 24 hours with them, check out their facilities, as well as ask really needle-moving questions to figure out, is this a good or bad industry? And more importantly, is this a good or bad business? So I appreciate you guys checking out this. If you enjoyed this, do yourself a huge favor and smash that like button, and I'll catch you guys on the next one. Peace.